Hey dividend investors, today I'm going to be talking to you about the Vanguard S&P 500 index called VFV.TO. This is the Canadian version essentially of VOO. And I'm going to get down to why I say that right now. So this one trades currently at $88.83 per share. Now from there, what we want to look at is the yield, and of course the yield is 1.24%. Now this is a Canadian ETF that does hold American stocks. Technically, it holds an American ETF that holds American stocks. It's an S&P 500 index fund. Now, why is that important? Well, really quickly, of course, Canada does have its own treaties when it comes to dividends. Now, I personally am not too sure how they are dealing with the treaty, but if you want to be safe, if you want to get tax-free essentially with the dividend, for sure, RRSP is the way to go because there is a tax treaty when it comes to the RRSP. With the TFSA, they automatically can take out part of the actual dividend, same as a margin account. However, because this is a Canadian ETF, I am not too sure how that dividend portion does work. You're going to have to do some research. I've done some research and I cannot find it myself, but I can only assume that because it's through an ETF, a Canadian ETF, the taxes would have already been paid on the American side, and if they haven't, then personally, I have owned quite a few Canadian ETFs that hold American companies, and I've never seen any tax issues with it at all, no matter what account I've had. So keep that in mind. So from there, it does have a 0.08% MER. What does that mean? Well, for every $100 that you put in, technically you will be spending 8 cents per share, or I mean 8 cents per $100 when it comes to the MER, because it costs money for them to invest your money, so they take money from you. But when it comes down to it, a 0.08% MER is absolutely nothing, so I wouldn't worry about that at all. From there, when you're looking at the volume, it's not too bad. It's 150,000 shares per day average, and that is really good. The reason why that's really good is because, of course, when you're looking at the volume, if, for example, you want to sell 1,000 shares and there's only an average volume of 500 shares, it's going to be really hard to sell those 1,000 shares. But when you're talking about hundreds of thousands of shares, you're generally pretty safe. There's not too many people who will go out there and buy 100,000 shares of a specific ETF all at once, and usually not sell 100,000 shares all at once either. Of course, this does trail what the market is doing, and remember, this is a Canadian ETF that does shadow an American stock, American ETFs. And why I mention this is because even though this is going to be fairly similar to the actual S&P 500, there is something that I do want to let you know. There is a currency difference. Canadian versus American. There hasn't been any massive fluctuations over the last couple of years. However, let's not forget, it was only maybe 15 to 20 years ago where it was pretty well close. I think it was around that time span, maybe 10, 15 years ago in that range, where the Canadian dollar was actually pretty well set on par. I remember investing into American companies like AMD, and literally the stock not moving, and I was still making money because the currency of Canadian dollars was going down into the toilet. So you have to remember that if the Canadian dollar goes down, then generally speaking, this investment should go up no matter what generally happens. And of course, if the Canadian dollar goes up, you may tread water for a while on this investment. So keep that in mind. Now, it does pay a dividend, and of course, what we're going to do is look at June of 2019 and look at June of 2018 and see if there is an increase in dividend, which there is. And then if we look at March of 2021 versus March of 2020, there is a small increase as well. Not massive, but small increase as well. So this tells me that this dividend is continuing to go higher, which is good, especially if you're a dividend investor. Now, why I say it's basically VOO is because it just basically holds VOO, and then it basically holds some futures, very small amount, That's going to protect a little bit of your currency issues right there. I would feel like it would. And VOO is a pretty good ETF. Just really quickly, its volume is into the millions, so you're not going to have to worry about all that much. When you're looking at the actual chart, it's going up, it's going up. Of course, there was that fluctuation because of COVID, but again, that was going to happen with everything. And then when you go and fast forward through all of this information, the top 10 stocks that it holds is basically the top 10 companies in the United States. Apple, Microsoft, Amazon, Facebook, Alphabet, which is Google, which is technically also SpaceX. Keep that in mind. If you want to invest in SpaceX, you can invest in Google because Google gave $100 million to SpaceX. Tesla, Berkshire Hathaway, JP Morgan, and Johnson & Johnson. So overall, it's a good ETF. There are other options, but keep that in mind. There's SPY, there's VOO. You could just invest into those just directly if you want to stay on the Canadian market and still worry a little bit of the currency fluctuations, which you'd be worrying about anyways, is of course investing in this one. There's also BMO equivalents as well as many others. iShare has their own version of it too. So of course, I hope that you've enjoyed. Make sure before you make any investment, don't listen to a random guy on the internet. Do your own research. Contact qualified professionals. I'll see you guys again next time.